Next is that fiscal reforms since 1990. That is, this is one of the important questions. First, some Indian economy problems and policies. This question in 2019 and also 2020. That is fiscal reforms since 1990 or fiscal reforms in India. So, in order to analyze fiscal reforms in India, first, what is the necessity of fiscal reforms? That is, in India, that is in the year of 1991, there are so many economic reforms are introduced to avoid macroeconomic instabilities. To overcome macroeconomic instabilities, at the same time, there are so many issues and problems are existed before 90s. So, government introduced so many reforms. The reforms that is mainly, there is industrial policy, then foreign trade policy, then here there is a fiscal reforms, etc. These are the main important reforms are introduced by the government of India to avoid macroeconomic instabilities before 1990s. So, in the year 1991, government introduced new economic reforms or new economic policy. New economic reforms or new economic policy, it introduced the reforms like industrial policy reforms, then foreign trade policy, fiscal reforms, financial sector reforms. They are generally known as India's economic reforms or new economic policy or new economic reforms. In new economic policy or new economic reforms, one of the important reform is known as fiscal reforms. What is the necessity for fiscal reforms in India? That is, in the year since 1980s, because of worsening of financial, that is, here there is a situation, worsening of financial situation, the government of India or central government argued here there is a need of comprehensive fiscal reforms. Because of the financial instability or worsening of financial situation since 1980s, that is since 1980s, here there is a need of comprehensive fiscal reforms. Which are the important worsening situation of financial or what about the reasons for the worsening of financial situation? Generally, there are two main points. One is that increase FD, that is fiscal deficit increasing, that is fiscal deficit to GDP this increasing. At the same time, interest payments to GDP. Interest payments to GDP, this ratio, that is interest payments to GDP ratio also increasing. These are the two situations why there is a worsening of financial situation in Indian economy. One is that because of interest, that the ratio of interest payments to GDP, this increasing. At the same time, here there is a fiscal deficit FD. That is fiscal deficit to GDP also increasing. These are the two important main points creating here there is a need of fiscal reforms in India. That is known as worsening of financial situation. That is since 1980s. In 1990s, government identified or central government argued here there is a need of comprehensive fiscal reforms. So, in the year 91-92, government implemented fiscal reforms. Which are the important points are included in order to introduce fiscal reforms? So, that is in 1990s, that is here there is a comprehensive need of fiscal reforms. 91-92 onwards, the central government introduced fiscal reforms. Which are the important points just include in the case of fiscal reforms? That is, what about the need of fiscal reforms? The main need of fiscal reform is that restructuring tax system. That is, here there is a restructuring tax system. This is the one of the important need of fiscal reform. That is restructuring tax system. What about restructuring tax system? In India, here there is a augmenting tax revenue is very necessary. augmenting revenue is very necessary. At the same time, to remove the anomalies, in tax structure. Remove the anomalies in tax structure. These are the two important need for, here there is a restructuring tax system. For that purpose, central government introduced fiscal reforms. That is the need of introducing fiscal reforms. One is that here there is a restructuring tax system. What is the need of restructuring tax system? In India, here there is a need of augmenting revenue. Augmenting means increasing the revenue at the same time to remove the anomalies or which are the important problems are existed in tax structure. So, to remove the anomalies in tax structure and at the same time augmenting the revenue, these are the two important need for restructuring tax system. For that purpose, they focus on, here there is a restructuring direct and indirect tax system. That is, for that purpose, they may restructuring, and they focus on restructuring direct and indirect tax. Restructuring direct and indirect tax according to the recommendation of Raja Chellaiah Committee. That is, because of augmenting revenue plus to remove the anomalies of tax structure, they focus on direct and indirect tax structure according to the recommendation of Raja Chellaiah. According to the recommendation of Raja Chellaiah Committee, they focus on direct and indirect tax structure. Based this, that's according to the recommendation of Raja Chellaiah Committee on direct and indirect tax structure, they pointed out or suggested some of the important recommendations. According to the Raja Chellaiah Committee, they identify the need of simple, moderate, rationalized tax structure. In India, to overcome, here there is a problems existed in tax or tax system. Overcome the problems of tax system, here there is a need of simple and broad-based, broad-based moderate tax structure plus fewer exemptions and deductions. Fewer exemptions and deductions, and here there is a rationalized tax structure. These are the important suggestions put forward by Raja Chellaiah Committee. So, to focus on direct and indirect tax structure, they recommended some of the important recommendations or suggestions here. One is that in India's tax system, because it was very to put forward the need of simple tax structure. In India, there are so many tax, it make our tax system more complex. So here there is a need of simple, at the same time broad base, including to all, broad base, then rationalize. This is even, or here there is an attainment of equality or the need of rationality. At the same time, not only this, fewer exemptions and deductions to avoid, that's in the case of deductions and exemption. So such a type of tax system, definitely it creates broad base. These are the important recommendations put forward by Raja Chellaiah Committee. So simple, broad base, rationalized, then here there is a fewer tax rate, at the same time fewer exemptions and deductions. These are the important recommendations put forward by, that is in the case of Raja Chellaiah Committee. Such a type of direct and indirect tax structure introduced by or recommended by Raja Chellaiah Committee. So in India's tax system, this is more complex and not broad based. At the same time, so many exemptions and deductions, it created so many problems. Tax evasion is very strong because of fewer exemptions, because of exemptions and deductions. So to avoid tax evasion, the best policy is that tax system, it is very simple. So it does not hurt or does not create any problem among the individual. So it is very simple. That is easy to calculate and easy to administer. So does not create any hurt among the individual. Broad-based, including to all, avoid deductions and exemptions. So it create broad base. At the same time, fewer rate. Rate also may be very less in character. So simple, broad base, rationalized, fewer exemptions and deductions. These are some of the important recommendations put forward by Raja Chellaya Committee. After that is not only Raja Chellaya Committee in the year of 91-92, some of the other committees also put forward to restructure our tax system. One is the Raja Chellaya Committee. Not only this, in the year of 2001 and 2002, there are some other committee also. The name of the committee is that, one is that Advisory Group on Tax Policy and Tax Administration in the year of 2001. That is one committee, not only the Raja Chellaya Committee, other committee is known as, here there is a Advisory Group on Tax Policy and Tax Administration in the year of 2001. There, that is the committee chairman, that is, here there is a Parthasarathi Sham. Parthasarathi Sham in the year of 2001. He was the chairman. Another committee is known as Task Force on Direct Tax and Indirect Tax. That is Task Force on Direct Taxes and Indirect Tax in the year of 2002. Its chairman Vijay Kelkar. These are some other committees are formed after Raja Chellaya Committee. One is that 2001 under the chairmanship of Parthasarathi Sham. The committee's name is Advisory Group on Tax Policy and Tax Administration. Another committee is known as Task Force on Direct Taxes and Indirect Taxes in the year of 2002. Its chairman Vijay Kelkar. These are some of the important committees are existed during that time in order to improve or restructure our tax system. Based on these committees, like here there is a Raja Chellaya Committee plus Vijay Kelkar Committee plus Parthasarathi Sham committees. Based on, there are some of the important recommendations. Some of the recommendations are put forward by these committees. Which are the important recommendations or measures or suggestions are taken by the committees? The first important measure is that that's personal income tax and corporation tax brought down to 30%. That is brought down to 30%. That is mainly the tax like personal income tax and the corporation tax. These taxes brought down to 30%. Personal income tax or the income tax, that is tax on the income of the individual. That is known as personal income tax. Corporation tax is that it's a tax on the profit of the companies. One is the profit or income of the companies. Another is that income of the individual, that is equal to income tax. Both tax rates it is reduced or brought down to 30%. This is one of the important recommendation of these committees. Brought down to 30%. And second that's introduction of fringe benefit tax, then securities transaction tax, and here there is a bank cash withdrawal tax introduced by the central government. There is some other taxes introduced by in order to augmenting revenue or in order to increasing revenue. Tax like here there is a fringe benefit tax. This is a tax imposed on employers. That's why the tax imposed on employees based on which are the benefits are that's provided to employees. Based on the benefit enjoyed by the employees, government imposed tax on the employer. Example, medical insurance allowed to the employees. Government implemented tax on the employer providing such a benefit. In the same way, here there is a LIC on employees. Government implemented, that is, government started tax on these benefit, that is equal to fringe benefit tax. It's an important measure for augmenting revenue. Another tax is that securities transaction tax, also introduced by the government. There is tax on the securities. That is also another important way for increasing revenue. And third is that bank cash withdrawal tax. Anybody withdraw the bank balance, that is government implemented tax. So these are the various types of tax in order to increase the revenue or augmenting our revenue. That is the first important, that is second important measure. So first is that income tax and corporation tax brought down 30%. At the same time, here there is some type of tax like fringe benefit tax and then securities transaction tax and bank cash withdrawal tax also introduced by the government in order to increase the revenue here. And next is that in the year of 94-95, government implemented service tax. Government implemented service tax. The purpose is that it reducing, here there is a excessive tax on manufacturing sector. Government implementing excessive tax on manufacturing sector. To reduce the tax on manufacturing sector, government implemented a particular tax that is named as service tax. This is another important recommendation given by this committee. Like here there is a Raja Chellaya, then task force, then advisory group on tax policy and tax administration. That's another important recommendation. And next is that here there is a simple moderate custom duty and here there is a excise duty. There is commodity tax like custom duty and excise duty. There is their tax rate, it may be simple and moderate. There is too much custom duty and excise duty existed in India. Then reduce the custom duty as that is 12.5% in 2006-2007. Increasing custom duty adversely affect our export and import. So reduce the tax rate as 12.5% in 2006-07. That was the another point. In the same way, that is here there is a excise duty also reduced to, that is central value added tax. It introduced, that is 8 to 16% in 2006-07. Only the tax rate as 8 to 2, that is 8 to 16%. That was the another important measure taken by the government, that is simple and moderate. Moderate and simple type of tax rate is the best measure to correct anomalies in tax structure. So if there is simple and broad based and moderate, it avoids the tendency of tax evasion. So better is that if the tax system is very simple, it is very moderate and it is broad based, here there is a evasion or escape mentality, it completely avoided. For that purpose, here there is a custom duty reduced. The best example is that 2006-07, this was only 12.5%. More than 100% custom duty existed in India before 90s. In the same way, here there is 8 to 16% of that is centralized value added tax. Then another is that here there is a uniformity and rationalized, that is sales tax. Uniformity and that is here there is a uniformity and rationalized sales tax. It renamed as value added tax. That is in our economy sales tax, it is too much, it is more complex in character. To avoid the difficulty for calculating and collecting sales tax, here there is a need of uniformity and rationalized sales tax, that is known as value added tax. These are the main important recommendations put forward by this committee. One is that reducing the income tax and corporation tax to 30%. And secondly, that fringe tax, and then at the same time fringe benefit tax, and then securities transaction tax, and then bank cash withdrawal tax is also added here. Introduction of service tax to avoid the excessive tax on manufacturing sector. Then here there is a simple moderate custom duty and excise duty. And last is that here there is a uniformity and rationality in sales tax to the value added tax. These are the important recommendations put forward by to overcome the tax structure in India or tax system in India. This is the first important measure here.